first off, what do you think? Have we seen the lows of the year?
I don't think so. I think that what we're going to find is a bumping on the bottom for quite some time, because I think that the U.S. growth is going to remain very, very tepid, if not go into recession later this year. So I'm of the view that actually the earnings prospects for corporates are pretty darn lousy in the U.S.
What's the impact for Asia? You've got a PhD, Enzio, in economics, so you are the man with the knowledge.
Well, not necessarily, but I would think that it will mean slower exports growth for Asia, more reliance on private consumption here, and the good news for Asia, a cut in interest rates in places like India, China. They will stop increasing the reserve requirements, which they just did. I think those are the last bites at the cherry for this worsening economic time in Asia. So an improvement in economic time in Asia.
Now, Enzio, what makes you think that there's going to be a recession in the U.S.? We heard the IMF, they downgraded their forecast, global forecast, to 1.6%, but at 1% growth, that's growth. That's not a recession.
That's growth, absolutely. Yeah. The IMF, however, has been very much behind the curve ever since they started launching these forecasts. So they're like the OECD. They provide excellent policy papers, but I wouldn't look to them for growth forecasts. Far more revealing are things what Zeb just mentioned, things like the copper price, which I do not expect to go up. Things like unemployment, which is structural in the U.S. It will be going up, not down. Consumption thus has to go down, because the housing market will continue having huge problems in the U.S.
Ben Bernanke and his team have personal spending last night beating estimates, durable goods beating estimates, home sales rising the most since 2005. Encouraging figures. Obviously, there are many figures that are not encouraging, particularly this Friday's jobs report.
Where's this going to? Let me guess.
Well, I'm not going to mention quantitative easing,
okay.
but not this week. But do you think that he looks at the more positive figures and says, let's hang on in there?
I think he has to, because if he were to come out with what we're, for instance, suggesting, then I think the markets would really take another crack down. So I think that he has to be deliberately optimistic in what he's saying.
In terms of what? That the recovery is intact?
Yes, that things are looking all right.
Strong.
Yes. Yes.
Right, okay, and so I'll ask, since John is being shy here, does Bernanke need to do another round of quantitative easing?
Well, he can't do a whole lot more than he already is. I think what they have now is Operation Twist, which is that they will be buying more and more of the long-term U.S. Treasury bonds to push those yields down to keep the U.S. housing market going, okay? I don't think that what we economists call the marginal utility, in simple talk, the effectiveness of a further round of quantitative easing would really be that great, frankly. And I think also that monetary policy itself is only one tool. The much more important one actually would be fiscal policy, but frankly, Congress is as effectual as Parliament is in Japan at present.
He's calling for a recession in the U.S. So again, reiterate, what does that mean for Asia? Slowing exports, does that mean a crash for economies as well?
No, it doesn't mean a crash at all, because Asia has gone very much more into a private consumption mode. Let's not forget that private consumption is about 70% of any economy, and private consumption is driven by women. It's not driven by men. So, in my humble opinion, what we'll find is a lot more of you people shopping.
You people?
Absolutely.
Oh, you call me you people?
You people, absolutely.
Right,
we're not a misogynist. Quite the opposite. But I think on top of that, Susan, what you've got is the central banks beginning at the top of the tightening cycle. I really think that they will start improving the economic time going into the fourth quarter of this year, if nothing else, because we do have some elections coming up next year. And if nothing else, we have more popular, the need for more popular support coming through.
Yeah, you're talking about the U.S. I want to talk to you about China, though, because you know, there's a lot of negativity, shall we say. We had Fitch coming out talking about the property sector once again and comparing it to Spain. I mean, the property sector is even hugely leveraged compared to Spain just 3 years ago when we saw that crash. Do you have any concerns about China?
Not really. I think that they've been, my concerns are more on the political governance side of the place, because I think that the more powerful that local provinces become, the less governable China itself is. This goes to say that Beijing is losing its grip on China. because the local provinces are increasing their power at the expense of Beijing.
How do you govern 1.3 billion people, though?
Well, that makes it very, very tricky, and especially where you have more and more internet, more and more migration, more and more emigration from China, more immigration into China. So you've got a whole convulsion of sort of activity going on in China, and I think it makes it a lot trickier to rule the place.
Right,
okay?
but they're trying to take their, I guess, the foot off the brakes right now, aren't they? I mean, we had this triple R increase. Well, they try to, I guess, a caveat it in a different way, but it pretty much was a reserve rate ratio hike, wasn't it?
Oh, absolutely. So they've put the brakes on even more,
right,
because that's what you were saying. And what that means is that they're trying to now control the lending of the so-called entrusted, or the so-called trust banks. They're trying to control that more and more, because they realize that banks have actually gone outside the normal lending system into this trust lending system.
Okay, and China is not going to crash in your view?
China will not crash, no.
Okay,
no.
What assurances do you have?
Well, because what you will find is, picture a car where one wheel may bump a little bit, but that doesn't mean that all four bump. It doesn't mean that the whole car crashes. It just means that pockets. You will have rolling recessions in China and rolling booms, as you do in the U.S.
Are we heading towards a recession in China?
You have rolling recessions already, I'm sure, in parts where the labor costs are just so high, for instance, that you've had emigration of workers back to their home provinces. Okay. You have booms in other parts.
And we didn't touch on Japan, because I was going to save it for the group discussion. But what did you call what's happening in Japan?
Non-event of the year.
Right.
Effectiveness of U.S. Congress is what we're seeing there. The reshuffles in the party leadership in Japan are as opaque as they are in China. One just doesn't know. Or it actually makes China look quite transparent what's going on. So
it's interesting to me we haven't seen a bigger outcry among the Japanese public that they tolerate this kind of yearly changing of prime ministers, and gridlock is probably not gridlock. I can't talk today, and gridlock is the right word to use.
Well, I think that's a little bit possibly also the Japanese problem is that they haven't apologized for World War II yet. He keeps on thinking that there is no problem with the war criminals there.
Are we really going there, Enzio?
Well, no, not really. It's just that it seems to me as if the Japanese do remain in denial for a long time. Also with the earthquake, for instance, with Fukushima, what's really been done? I mean, it makes Katrina look like a walk through the park, basically.
But how does that affect policy?
Because non-action gridlock,
right.
Non-action gridlock, inaction, deliberate denial of things going on.
Well, I mean, one could argue that in China you have similar circumstances, denial of the obvious. I mean, I think that the thing that we're focused on here is the Japanese economy, which is really in a troubled state right now, and no solution seems to be there to fix it, given what's happened after the earthquake.
Well, yeah. Go ahead, Enzio. I was going to say that gridlock has a play and part in that, because when you have two parties ruling different parts of Parliament, you can't get any policies through. I mean, what's going to happen? What's the solution here? Are we waiting for the next general elections to take place?
Snap election. That's what
Before anything
Snap
actually
election
happens?
might happen. I mean, you do have coalition governments on the continent of Europe, so coalition governments in themselves aren't a reason, or in Britain.
Not very effective, Enzio, I must say, from my point of view.
Not in Britain, no, but on the continent
In Britain there was a coalition government.
they've done okay. Yeah, on the continent they've done okay. Yeah. In Britain it is a problem, but I think even exacerbating that problem, Susan, has to be that Noda is a right-wing candidate in a left-wing party.
Whoa, what does that mean? Sorry.
What that means is that he wants to raise taxes, and his party will not allow him to do so, the DPJ.
Right. I thought he was a very prudent man. I mean, he's trying to keep fiscally, he doesn't want to balloon the fiscal deficit anymore.
And that's why he wants to raise the taxes.
But Enzio has also intervened 3 times since finance minister, 3 times in a year on the currency. It has done nothing to stop the strength of the yen. So as an effective policymaker, he hasn't got a great record.
Well, I'm not sure that currency intervention helps a great deal anyway. Look at the Swiss trying to also stem the rise of the Swiss franc.
That's something else maybe to be effective, and it hasn't worked.
Well, I'm afraid they haven't instituted a lot of corporate governance reform, opening the country up. They never will. That's Japan's problem in my mind.
I'm wondering whether the matching tie handkerchief and watch red indicates your sort of take on the fourth quarter markets-wise. Is it all red?
It's going to be a little bit.
It's a very tenuous link to your
That's very tenuous.
I like being tenuous.
But I do think it's going to. The markets will be quite bumpy because I just don't think that the Congress is going to come up with any brilliant solutions by the 23rd of November, when, of course, the Super Committee must have done its resolutions, by the 23rd of December, by which time Congress must have approved those resolutions.
Right. Before we get John into some wayward tangent here, let's talk about the yen again, because you said the yen would hit 50?
Yes.
When?
Within the next 5 years. I mean, it's not going to happen tomorrow.
50 to the U.S. dollar.
50 to the U.S. dollar. Don't forget, it kicked off at 400 to the U.S. dollar.
Yeah, we're just about 79 right now.
It was 79. And there's no reason for the dollar to really strengthen. Reserve currencies always have problems. Reserve currencies always go south.
But that would wipe out the Japanese exporters, wouldn't it? I mean, look at what the current level. Look at what 76 does to their profitability, their earnings.
Yeah.
I mean, this is that would take them off the map, I would think, unless you have some complete restructuring of the system.
Well, that's something that they're now allowing, that they want more and more Japanese direct investment abroad, and that's been officially sanctioned by the Ministry of Finance, I believe. So I think that they are allowing more investment abroad.
And you've got Wayne Swan in Hong Kong right now talking to Donald Tsang and his team about one of the topics of floating yuan. How reasonable an idea is that?
I don't think in the near term it's very reasonable at all, because the banking system is simply not cut out for a truly convertible currency. You do have to have this hackneyed phrase, a rule of law, in order to have a functioning currency system come into place, and that simply isn't the case in China yet.
All right. Okay. So let's talk about currencies and where's the best bet in Asia if we want to stay on this tangent, we stay on this topic.
Oh, Singapore dollar, without a shadow of a doubt. It's a well-managed currency. It's boring, but it's very well managed. They know what they're doing. They've just had their elections.
Wow, look at that strength today in the Singapore dollar, up
so
a fifth of 1%.
It seems to me as if that's very much a currency to be in.
How about the Aussie?
In the near term, I think that commodities are going to be a little bit weak, and we see that also with copper, for instance, Dr. Copper going down. But I do think that on a 3-month view, it's probably something to get back into, because I do think that the East will pick up again in its commodity demand, particularly China. Again, because we think that the Chinese economic time is probably at its worst now, and it will only set to improve in the fourth quarter.
And there was an interesting point. We were talking yesterday, and last week we interviewed, Robin Meredith interviewed Michael Spence, and I believe he said, don't expect China to come to the rescue this time, where last time it came with that $500 billion stimulus program. This time around, if the global economy gets that bad, they would only be able to rescue their domestic economy. Do you agree with that, or disagree with that?
Well, I'm not sure that China ever did really come to the rescue. I think that the only place that can really come to the rescue of the world economy has to be the U.S. at the end of the day, because the market in the States is just so big and so influential. I mean, as a point of fact, the bond market is 7 times larger than all the other bond markets combined. Now, that's a size, a depth of sophistication, a depth of brain power that just is unrivaled anywhere else in the world. So my view would be that China coming to the rescue is more hopeful thinking. They may be able to import a little bit more. They can certainly rescue individual economies like, say, Australia, because of the commodity imports, of course. But I wouldn't say that they're the rescuer of the global economy.
You know, I've got one more question for you, Enzio. Yes. You were talking about recession. You're expecting a recession in the U.S., but we're seeing these markets. I mean, day after day, we're seeing gains recovering from the huge losses we saw in the, last 4 weeks or so. What do you think is behind this enthusiasm, behind investors, and is it over-optimistic?
Over-optimistic, it's a dead cat bounce. What I'm saying with that is that what you were saying before, that the valuation of the markets is so low that it just looks like a compelling buy. What's perhaps easily forgotten is that there's a reason why it is so cheap, and that's because growth prospects are, to put it nicely, quite rotten in the U.S.